What I see is a company operating like a public treasury, a fintech experiment, and a startup validator all at once, and the market is trying to figure out which hat matters most. Bitmine, ticker Bmnr, is back in the headlines because it's doing exactly what it says it will do: accumulate Ethereum, lock a pile of it into staking, and build out a validation platform called Maven while simultaneously keeping optionality to raise capital. The result? A stock that reacts to crypto flows, staking math, and occasional retail theater, all at the same time. Bmnr closed the previous session at $31.16, modestly higher on the day as the company advanced its large-scale Ethereum accumulation program. Bitmine reported combined crypto, cash, and moonshots holdings in the multi-billion-dollar range and has been adding to ETH in public, headline-making trades. The company's recent filings and releases put its total ETH holdings north of 4.16 to 4.20 million ETH, a number that makes investors and on-chain watchers sit up. What I observe is that staking isn't just a yield play. Staking is a liquidity play. When a company stakes ETH, it locks tokens and removes them from the pool of immediately tradable coins. That reduces exchange supply and, all else equal, makes the system tighter. Bitmine's recent move to stake 86,848 ETH in a single tranche raised its stake total to about 1.77 million ETH, valued at roughly $5.66 billion at the reference prices the company used. That's a huge, headline-grabbing figure, and it's one of the primary reasons analysts and on-chain trackers are talking about renewed supply pressure in the ETH market right now. Staking matters because it converts a potentially volatile holding into a predictable revenue stream, staking yields, while simultaneously lowering liquid supply. Imagine you collect baseball cards, beautiful, shiny, tradable, and you put a huge batch in a museum vault where they still generate interest, admissions fees, but nobody can trade them on eBay. The cards are still valuable, they're just not available for fast trading. Here are the specific numbers investors are parsing, and why each one matters. Total ETH holdings. Bitmine's published figures put its ETH holdings at roughly 4.17 to 4.20 million ETH after recent purchases. That level of accumulation makes Bitmine one of the largest corporate ETH treasuries in the world. Percentage of circulating supply talk is inevitable here. The company has shown it can add tens of thousands of ETH in a single week. Staked ETH. The firm reported staking actions that lifted its staked ETH into the high six-figure or low seven-figure range, about 1.77 to 1.84 million ETH in various public reports, depending on the timestamp you read. Those tokens are locked to secure the network and earn rewards, which transforms a portion of the treasury into yield-generating assets. Cash and moonshots. Bitmine also reported a cash balance in the high hundreds of millions, roughly near $1 billion in recent filings, plus smaller strategic equity stakes labeled as moonshots. That cash is the optionality engine. It enables spot buys, JV investments, or bridge financing for platform rollouts. Why do those digits matter? Because they let you model the company both as a treasury manager, balance sheet exposure to ETH price swings, and as an operating business, staking yields, Maven revenues, potential spinouts. It's a hybrid you don't see every day. By the way, if you are getting value from this video so far and want more like this, please like the video, it means much to us, and hit the subscribe button, and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. What I've observed across on-chain data and market reports is a persistent decline in ETH held on centralized exchanges. Exchange balances are at multi-year lows according to multiple analytics platforms and market write-ups. When exchange supply drops, it changes the market microstructure. Fewer coins are available to sell into a big buy, which increases the likelihood that a large buying program, e.g., Bitmine snaps up 24,000 ETH this week, will move the price more than it would if liquid supply were ample. That dynamic is part of why analysts tie Bitmine's staking and accumulation to potential supply pressure. Picture a crowded farmer's market where every vendor has fewer tomatoes than usual. If a chef walks in and wants a crate, the price for that crate jumps, and everyone who owns tomatoes smiles. Bitmine staking is one of those chef-sized purchases. Bitmine isn't only hoarding and staking, it's building infrastructure. Maven, Made in America Validator Network, is Bitmine's planned commercial staking/validator platform. The company has said it expects Maven to begin operations in Q1 2026 and to scale staking throughput once fully operational. The logic is simple. Owning ETH is one thing, Owning the plumbing that validates the ETH and collects staking rewards is another. Maven upgrades the company from passive holder to active network participant. Think of Maven like buying both a rental apartment building and the property management company that runs it. You not only collect the rent, staking yield, but also control the platform that extracts efficiencies and can sell services to others, validator as a service. The Beast Industries deal and moonshots. Why this is eyebrow-raising to $3,000. Bitmine has signaled it's not purely a one-trick treasury. The company is reportedly closing a $200 million investment in Beast Industries, Mr. Beast's company, this week, a move that was widely covered in the press and positions Bitmine into creator economy/DeFi adjacent plays. That stake hasn't been folded into the moonshots line item in some releases yet, but it's a strategic example of how Bitmine can deploy capital beyond simply buying ETH. The Beast investment is both an intriguing diversification and a PR magnet, the kind of story that makes retail investors very chatty. Analysts linking Bitmine's staking to supply pressure are making a two-part argument. Large-scale staking removes exchange-available ETH, reducing the pool that can be sold into an order. Institutional adoption and treasuries locking ETH create a self-reinforcing scarcity narrative. As corporations lock ETH, speculators expect less liquidity and potentially higher prices during demand shocks. I find this argument persuasive as a mechanical effect. Locked ETH is almost equal to less liquidity is almost equal to potential for sharper price moves on fresh buying. But remember, markets are forward-looking, expectations about future flows matter as much as present flows. If investors expect demand to evaporate, they will price that in. The narrative is a supply-side story turned into sentiment. The risk side, what I see that keeps me cautious. Here are the risks I have observed, and why they matter. Price risk, mark-to-market. If ETH falls, Bitmine's balance sheet weakens immediately. A large drop reduces the value of staked and unstaked ETH and can pressure the stock independent of operational progress. That mark-to-market is raw and unavoidable. Dilution risk. The company recently secured shareholder approval to increase authorized shares, the kind of governance step that makes you realize management wants flexible capital tools. That doesn't mean new shares were issued, but it means they can issue them, and if management issues a lot of stock to buy ETH, existing investors can be diluted. The market discounts that probability. Operational/execution risk for Maven. Building and running a secure validator network is non-trivial. If Maven is delayed, underperforms, or suffers an outage/security incident, investors will react. Staking yields and platform credibility both hinge on solid operations. Note this as well. Daniel 7 verses 25-27 tells us, "And he shall speak great words against the Most High, and shall wear out the saints of the Most High, and think to change times and laws. And they shall be given into his hand until a time and times and the dividing of time. But the judgment shall sit, and they shall take away his dominion, to consume and to destroy it unto the end. And the kingdom and dominion, and the greatness of the kingdom under the whole heaven, shall be given to the people of the saints of the Most High, whose kingdom is an everlasting kingdom, and all dominions shall serve and obey him." Want more information about the books of prophecy? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: "I stayed until the end." Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage us to continue bringing to you more insightful videos. Do not miss out on our future videos. All I am asking is your subscription. Thank you for joining me today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's love.